Hello, Face. Let's have a productive week. It's going to be a wild week. So if you watched the week ahead video by Blake, it's interesting. A lot of us have this triangle. First attempt to break out did not work. Kind of makes this line look a little less significant with the action that we got off of it. So, a lot of major things happening here. Number one being Brexit. Number two being ECB coming up this week. So kind of a no touch for me right now. Euro pound's exploding, as you know, we've spotted a couple of weeks ago. Just want to take a look at it. I haven't seen it in a while, but it looks like it's making that move. Euro pound above 90 now. So we talked about it after this, little pullbacks, 90, and now it's looking more and more like we're going to challenge this 91 level, and maybe there's enough juice to take it all the way to 94, depending upon what happens with Brexit. So it was more about euro holding and the pound continuing to be under pressure. And with the Dixie, the weakness in the pound is kind of up, evening out the weakness in the pound is being evened out by the euro trying to hold. Dollar index still mid-range. We talked about 640 being important, and Blake did, and so far 640 holding. Still looks pretty neutral to me, although I have a bearish bias. Like Blake's video, you can make a case for either. So in that case, you really don't do anything. And when we get to the metals, still don't think gold is finished. It definitely has outperformed. Hasn't needed an extremely weak dollar to make the move that it has. Perhaps there's some type of resistance here, but we had confirmed highs on the 4. So to me, it doesn't look like it's over, but we could have some kind of pullback in here before heading towards targets between 1254, 1260, and then possibly 1280, which would be pretty close to 61.8 back from 1360 highs to 1160 lows. 200 takes it halfway back, 1260. So we're approaching a 50% retracement all the way back from the top that we had here. And as far as the S&Ps are concerned, they started off much lower and have fought their way back. I just have a hard time wanting to get short in the hold down here. It's possible that these lows may end up holding even from a NASDAQ is above the highs. S&P, I believe, challenged them, held them by a couple handles, not by much. But I have to say that after being short the yen last week and watching the market fall apart, sometimes you have to be in a trade that's not rewarding you as much as it should have to know that perhaps you're the wrong way. Getting a decent candle in yen, and there really wasn't much of a break. So I don't hear a lot of people talking about being long US dollar yen, meaning the yen declining, and many more talking about have opinions on the dollar, on the euro, on cable. But I don't see a lot of constructive views in US dollar yen, and I think it acts pretty constructive. So, I'm thinking there's an outside chance for risk on if it continues to happen for the yen to trade up towards 116. This is the weekly chart up here. So 112 looks to be the line in the sand that it continues to hold. We've had all this negative action in S&Ps, right? Here's the weekly S&P. Boom, last week. And then here's the yen. That's the DAX. Here's the end. Not much downside. Sideways more than declining. So be careful if you're short the yen. I know a lot of people want to be short the yen because they're bearish risk. But you have to listen to the market. And last week, I think the yen should have already been, back to these lows, just like the S&Ps were retesting lows that they made in October. And, here's where the yen was in October. And it couldn't even take out this low of 1137. So the major message is I was one of those in that crowd thinking the yen would crack with risk coming off. I took that trade because it's just too much vol for me to be putting on positions in the S&P futures myself. So be careful with the yen shorts. And I really am not going to be plunging into the market until I see the Brexit vote. Blake seemed to believe that if it doesn't go well, it could drag the euro back down with it, that it's, even though it's not going to be great for the pound, it's not going to be great for euro either. So we'll see what happens here in the euro. Aussie, if you believe this was the low right here, then we should be looking to buy breaks in Aussie if you believe this was a low. We almost got to the 61.8 level of this first wave. So thinking if the dollar is going to turn good, instead of a market trying to break out, both the Kiwi and Aussie fought dollar strength for quite some time. So there may be an entry between 71.65 and 78.6 at 71.03, risking the low of the move. And considering that this might be a wave 2 or B pullback here, and that eventually, if we get something like this, we're going to crack it and trade 76. So the commodity currencies are interesting to me. Just with the backdrop that we have right now, I'm going to be sitting on my hands. And while I do that, just like Ronnie said, you have to be willing to sit in front of your screen and watch the market for days, waiting for something that is compelling enough to assume risk. That's what I'm going to be doing. It's a good time for you to get set up, at least with the trial at ForexAnalytix for $1. It's also a good time going into the end of the year to review whether or not you're comfortable with the platform and the broker you're using, and to consider going to talk to Trent and Justin at Forest Park FX, perhaps even opening a separate account, being aware you could get rebates or reimbursement for the subscription to ForexAnalytix. And you never know if you have a good rate source until you run it against another. So it might be a great idea if you were thinking about, I'm not, it's okay, the broker I'm with, but maybe I could do better. These guys will be able to help you because they know so many of them. See, not for non-US and US, and they will arrange so the broker doesn't get the whole commission every time you trade, or the spread, and you get a piece. So they're a broker of brokers, Trent and Justin. Get a hold of them. Maybe if you feel like me, you'd want to wait to see what happens with the Brexit vote. No one's putting a gun to your head to say you have to trade every day. This could be a good time to take care of some business outside of trading and call our sponsors, which are bringing this webinar to you. And with all that being said, I watched Blake's week ahead, trying to prep people for the battlefield this week. And I'm going to ask Blake if anything he sees from last night and today changes what he had to say on the week ahead video. So Blake, has anything changed for you, or you have the same mental stance about, waiting for the Brexit vote and to see what type of reaction you get. And you gave a nice, I think, point underneath cable, where if it is going to turn into a false breakout, where people might be looking for support to come in after the vote.
Well, good morning, Coach.
Hey,
so it seems as of right now, the vote's going to get it's going to be pushed off, and so that's the news this morning. So that she's going to Theresa May is going to postpone the vote. As it seems, these are the rumors that are circulating, and it seems like it's coming from several different sources. Which just chatting with the guys at our office, and they're like, hey, is it better for the cable? Is it better for the cable if a bad vote or a bad Brexit deal is voted on, or postponing the vote and getting a better deal? And there's so many questions right now that surround Theresa May, like she's just trying to hold on to power, obviously. Now, who wants to take her role?
Who wants a job? Yep.
Who wants that job? And then everything get voted down, and it's like no one really wants her job. But the flip side is like, people, they want a deal, but is it good just not getting a deal right now as it stands, the one that's presented to the UK people? So anyway,
what
the cable,
what a political soap opera,
and it's very convoluted, and as a trader, trying to make sense of it all, it really doesn't. Now, all we can do, without sounding or trying to sound like experts, which I'm not, and I don't want to pretend. Just looking at the technicals, that the pound fell based on the news that the vote will get postponed, or quite possibly will get postponed. But we broke below the trend lows, and we broke below this 126.60, and now here we are hanging out near the lows. But if we rally back above 127, technically that gives us a little bit better picture for the bulls, like the stop out below the lows and reversal. So I really was hoping for a vote tomorrow, and the reason why, because I really just wanted the opportunity to sell the heck out of the cable and possibly play a reversal, or the vote go through and then play the pound to the upside back up to 130, and that was my plan going into the end of the year. Really, this is like the big shebang for me going into the end of the year. It's like I kind of want, I just want something to do, and an opportunity to make money, and that was like the plan. And it might be foiled right now, and so now you have to think outside of the box a little bit, And again, and the guys in my office raise a good question: is postponing the vote, I guess, until January, let's say, is that better for the cable in the near term, not accepting the deal as it stands? And maybe the pound reciprocates and rallies as a result. I don't know. I will tell you that the euro is pretty stout, and we're breaking above this triangle. And if the euro breaks above, let's call it like 114.50, we start taking on this 114.70 level, some of these resistance levels up here in the euro, we could gun for higher levels, and maybe we just get some dollar weakness that comes through the market. One of the reasons why the euro is so well bid, as you pointed out, Dale, is the euro pound. The euro pound is breaking higher, and that's keeping a bid. Once we cleared the 618, now we're above the 786. Yeah. The euro pound looks very bullish. But if the pound does a false breakdown, maybe the euro stops and the pound rallies. I don't know. I don't again, and I'm going to reiterate kind of what I said last night. Let me get rid of it. Let me get rid of these levels here really quick. You know, or I said last night, I said over the weekend, I can't get bullish the pound until we're above this, you know, this trend line. And I have, like, you know, levels that are marked up at, I'll probably move that down here, you know, 127.60, 127.70, you know, and then the cable will look a little bit better. Right now it still looks bearish, you know, it's a bearish wedge, but again, do we get a false breakdown? I don't know. And I think we got to watch it carefully today, as it stands, as we're looking at it right now, and you know, just kind of you know, watch the price action. I wish I had a, you know, a better beat on the market. It's kind of like a, you know, you just kind of stand by and wait for something to develop at this point. And
well, you know, buddy,
I'm going to be a little.
You know, buddy, the dollar index is a metaphor for trying to know which way to go, because it's frustrating both the bears in the dollar and the bulls.
Sure.
So, you know, I mean, we need a clearer picture in the dollar for us to go individual pairs to give us clearer signals, don't you think?
Yeah, I do agree. And right now, you know, the dollar index is, I mean, the dollar index is trying to break lower, but it's not, you know, it's not giving us that clear indication that
yeah, it came right back after it took out the trend line. Again, yeah, you know, so.
Yeah, so I think, you know, if you get a break below the support, it offers, you know, some more clarity.
Yeah.
But one thing that you pointed out, rightly so, is the dollar yen has been extremely resilient, and I'll tell you, we held the support. Stocks are positive. I mean, look at the S&P futures are positive. They started off down, you know, 0.5%, and we've rallied back. I mean, you see the S&Ps, they opened down here, and then we're rallying back. The dollar yen looks very well supported. I'm not trading it at the moment, but I'll tell you this much: I wouldn't want to be short the dollar yen right now. You know, it's not. To me, you know, it looks like the dollar yen is, you know, on its way back towards 113 and change. So I wouldn't want to be short that, and that's, I think, saying a lot, because if you're bearish risk, you know, that's a little bit of a risk right now that that you know, stocks might hold on to this bid going into the year end. I don't know. Hold on really quick. Okay. So anyway, you know, I'm just kind of, you know, scalping around a little bit, and, you know, I traded the euro on the long side a little earlier, just to kind of, you know, just, you know, like I said, just kind of scalping around, and I'm not getting too directional in the market at this point. I think, you know, it's there's some, you know, obviously we've got to just continue to watch the news stream, and this market is going to be headline driven. It's not, we're not seeing, you know, any clear indications, but this dollar yen, I think you could probably trade the dollar yen on the long side and just say, I'm going to put my stops below 112.20, you know, below this support here, you know, right through here. And you can say, I'm going to put my stops below there, and I'm going to target back at 113.50. I think that's a pretty logical trade at this point in time. Now, one of the other things I want to point out really quick is gold. Gold has come off today, and it's coming back down to this breakout point, which is just a couple points below where we're at, this 1243, 1244 level on cash gold, and I think this is going to have to hold as support. And if it does, then that's going to continue to keep that bid in the euro and maybe the pound. And again, the pound's going to be one to watch. I think this is going to be the pair that I'm going to be keeping an eye on to take cues off of. And if the pound can get back above 127, definitely above 127.50, that's going to you know, clue me in to be, you know, be more on the short side of the dollar at this point. So, you know, it's tricky. let's make sure that we point out the fact that the market is pretty tricky right now, and without the news without the Brexit vote, then the focus has to go and shift over to the ECB on Thursday, and that's where we're going to have to focus our attention and see if Mario Draghi is a little bit more hawkish than or dovish, quite possibly, but I would assume that it's going to be a little bit more hawkish at this stage. So and that could keep that bid in the euro, and euro really, we have to get above this 114.50. We get above 114.50, and that clears up a lot technically for me, because that means that the dollar index is breaking below this this triangle support and back below these lows, and you can see all this horizontal support that comes through here. If we break through that, then that would clear up a lot for me from a trading perspective, if you know what I mean. But yeah, hey, one of the other things, you talk about like equities holding up. The commodity currencies didn't break down last night. The Aussie's still a little weak, but it didn't break down. The Kiwi is still holding up pretty well. I mean, you look at the Aussie New Zealand, and that thing continues to get wrecked. But these commodity currencies are holding up pretty well. I think the dollar Canadian, this breakdown that we saw on Friday, you got to look at any move back up towards 133.50 as a selling opportunity. I actually sold a little bit earlier this morning at 133, like 13 or something, and I plan on adding to it on any move back up here towards the 618 at 133.45, and you can see that's going to be the bottom of this resistance zone. So I wanted to be on the short side of this dollar Canadian. If we get a little bit more of a rally, I don't mind adding to it at all. But that's kind of what I'm watching right now. And like I said, it is we're hampered by what's happening in the UK, and we have to wait for maybe a clear indication. Pound is back under pressure. We're approaching those lows once again. So, and that's actually weighing on the euro too. You can see the euros come off a little bit as well. So it's going to be something to watch, and yeah, I wish there was more developing, because I was really looking forward to this week as far as from a volatility standpoint, because we're running out of time. I mean, as I explained to you guys before, October, November, December, those are my months that I tend to do really well throughout the course of the year. It's mostly October, November, and October, November this year for me has been very flat. I've actually been positive over the course of this quarter, but I've not made the type of money that I normally, bring in at this time of the year, which is a little bit disheartening. And a lot of that has to do, I mean, if you look at the lack of, really, here, let's go over to the daily chart, the lack of volatility that we've seen in the dollar, for the last few months. It's just been kind of, grind up and down on the dollar. And now we've been really sideways all through November. I was really hoping for some really good volatility at the end of this year. And, the opportunities are looking a little bleaker at this point. And that kind of bums me out, if you know what I mean. But I wanted to bring in my colleagues, Steve and Stelios, and see if they have any idea. What, Stelios, so let me see if you're here. Are you here, bud?
Hello, I'm here.
Hey, good morning, Stelios. So what's going on? What says you about this everything, that all the news stream that's hit the cable over the last 24 hours? As a matter of fact, the pound's trading at lows right now. What stood out most to you in regarding this Brexit vote?
Well, first of all, I think we have to mention the main event of from yesterday, which is Ronnie O'Sullivan winning 19th major title. So he's the most successful snooker player in the world. What is it? Only me who watches snooker? Anyway, no. Regarding Brexit, it just looks like a big mess. The whole thing. It's just a huge mess, and I really don't know what Theresa May is doing. And
I don't think
she doesn't have the votes, right? I mean, if she doesn't have the votes, she knows she doesn't have the votes, so why proceed?
The question is, though, does she have the power to pull the vote, to say that the vote is not happening tomorrow? Because this is what's been said, but the question is, does she have the power to say that on her own? Is it her choice, or does it have to be agreed upon? I don't know the details, but apparently this is a question. It's a question mark. So like a friend of ours said a few minutes ago, if Theresa May wanted to make this as ugly as possible from the beginning, well, she's really succeeded. It's really not looking good at all. So what are the options here? If the vote does not go through tomorrow, then the scenario is that she's going to go to Brussels, try to renegotiate. Really, the Irish backstop is the main hurdle. At least I think that's what the Conservatives were talking about, and maybe try to get some concessions. But the EU on their side, they've been quite they've been quite firm. So I really don't know. If they haven't been able to get it done 2 years now, why are they going to get it done within the next few days? It's really. I mean, I don't know what to make of it. I've been thinking for weeks now that at some point there's going to be some logic, some kind of common ground. They're going to do something that's going to please both sides, let's say, because really the main hurdle in the UK is Labour, and they're completely against whatever May is doing, but they have their own agenda. So there is a way that some common ground can be found. It's going to be very tricky, but there should be a way. Let's put it that way. But the way it's been run so far, it just. I find it very difficult to see how she's going to save this mess now.
Yeah.
I don't know. I don't know. It's a huge mess, and it's been getting worse and worse over the past few days. So, have they done it on purpose so that people, the British people can see this and they say, oh, holy moly, what's coming? It's going to be really bad. Maybe we should really do something and try in the last moment.
Stelio, personally, I don't believe that. It's just, I think it's quite a straightforward situation. People that voted for Brexit had been promised that it's going to be a much easier and uncomplicated procedure, which was a huge lie. I'm not saying that they shouldn't have voted for Brexit. I have no stake in the game. It's their right to vote for whatever they want. But it's without doubt that many of them thought that it's a much simpler process than it is. So now that they have a grenade that they've pulled the pin off, because in essence that's the situation the UK is standing at the moment. They have quite a weak politician leading, because there is no politician that we would want to destroy their future careers by taking a situation that it has zero chances of producing something that is likable by the majority of people. So,
hey, Steve, I passed the charts over to you, by the way.
Oh, sorry, I didn't see, mate. Yeah, thank you very much. So I think, Stelio, that it's going to be it's going to have a lot more complications until we have some kind of a solution, because as Blake said before, and we've said it multiple times, there is nobody willing to jump on the grenade at the moment. May, on the other hand, doesn't have the political support. A solution that's going to be equally likable by UK people and the EU, I don't think that there's going to be one. So I think we have a long way ahead with whatever happens.
Yeah. I think the question we need to ask ourselves now, though, is, and the question I am asking myself is, we're looking at what's happening in the markets, all the headlines, the DSI, the COT. It seems that there really is no hope, right? I mean, there's no way this vote was going to get passed, even if it went through. And what's going to change? It seems that there is really nothing that can change this for the better. But everybody, look at what the market's pricing. The market's pricing pretty much very little chance now of anything positive out of the UK. So we're now at the point where there's going to be a lot of last-minute efforts. And we are still at risk of some major tape bomb. I don't know what it's going to be. And given what we're pricing, I think the risk now for something to push sterling higher is actually perversely is getting larger and larger. And that's why I've started very slowly. I've started shorting euro sterling. It's just my opinion.
I think that from an FX perspective, as long as we have this mess, the pound is going to keep dying a death of 1,000 cuts. You know what I mean? I think it's going to be much better to get something horrific. I mean, like, okay, we're gonna make a Brexit without even a deal.
Well,
then we're gonna see like a big.
The thing. That's the thing. If you're short the pound now, you're really betting for a no-deal Brexit. That's what you're doing. As long as you know what you're doing.
Even if that happens, I think it might end up being better for the pound, because then we're going to see a big leg down, and that's going to be it. At least you know what I mean. This stupid uncertainty that every single day something different changes, some different hope emerges, some different twist in the story. I mean, this is what I said. Death by 1,000 cuts.
Yeah, I agree.
Yeah. So I think that any kind of resolution, even a bad one, will bring the day closer that this mess that keeps having the pound pairs dripping lower is going to come to an end, even if that means one strong leg lower and then capitulation, everybody turning bearish, and that's the point where we're going to see some kind of a massive rally from the pound. But until that happens, you remember that we've been talking about this triangles, have the tendency of getting resolved to the downside. So personally, I do think that today, we're confirming the next move lower, which I find no reason why it shouldn't penetrate the next area of support, which is below 126. We can make it to the 78.6. I don't know. We can eventually even make it to new lows temporarily. So
I mean, personally, just to finish off, I'm starting to short euro sterling for two reasons. First, I don't think personally that there's going to be a no-deal Brexit, because no-deal Brexit is a big thing. They have to vote. The MPs have to agree on that, and it is a huge. I think it's a huge deal for the UK to leave just like that without anything in place. And also, I've picked euro sterling because I just don't get how this has been all priced into the UK, and the EU is like, yeah, they're no big deal, no harm done. Yeah, the UK is leaving the EU, there's no problem. I don't get that. So that's why I think
I agree with you. Although from a technical perspective, we were looking for, after this dip lower, we were looking for a move higher above this channel, and as you see, this is happening now. So, from a technical perspective, we also had this nice RSI divergence, and the daily is about to hit overbought levels. I do think that there's a high chance that we're going to break through the previous high that we had in the end of August, which was almost at 91 cents. So yeah, eventually that might happen. But I do think that the path of least resistance remains to the upside, at least until we get something differently. I mean, just purely by looking at the chart and not taking into account anything, to be honest, even trying to take into account the fundamentals at the moment is probably going to give you a headache, because, as I said, there are so many twists and of the plot, and so many changes, and so many rumors, and so many, every single week we have something new coming out that, if you're trying to trade this using the fundamentals in the short term, I mean, of course, is completely pointless, in my opinion. Now, at some point, I agree, we're going to see a capitulation in the pound. No matter what happens with the EU, we're going to see capitulation with the pound, and we're going to see a big reversal against the dollar. We're going to see a big reversal against the euro. But do we have the signs that that's about to happen imminently? I would say no. So from a technical perspective, I would have to say I would give it more time before doing something here. anyhow, since the cable is one of the most liquid pairs, I think we have to very carefully monitor today's price action, because if the daily close today confirms this breakdown, it's definitely, first of all, it's what you should be expecting from a technical perspective. Second of all, it's definitely a big bearish development, and it opens the door, for more downside. So for at least a few days, I wouldn't want to be in the long side of the pound. Now, having to do with risk assets, yes, we did gap down lower yesterday. Yes, we are trading at the highs so far in the indices. But personally speaking, I think that now we have a much better view of what is unfolding here, and what is unfolding here is probably a triangle. So even if we do rebound higher, I would be looking to this. This is actually what I posted on the weekend analysis. I didn't do it today. That we either rebound a little bit higher and then plunge lower, or we plunge lower from there. So personally, I'm 100% convinced that the way I should trade this, and speaking for myself, is that any strength I want to be short. I don't even think that, since we didn't manage at this leg higher to penetrate through this previous double top, because I thought when we were trading here that we might make it to the 78.6, get a lot of people trapped, being long at the worst possible point, and then plunge lower. So since we failed to do that in this rebound, I believe that any rebound that will happen from here is not even going to make it this time to 28.12, 28.15. So personally, any kind of strength, probably towards 26.90, I'm going to start sorting the index once again. And this since the S&P is the broadest risk barometer, that more or less shows my intentions about the rest of them. I mean, Nasdaq clearly remains weaker. You can see that while the S&P was not posting a lower low and it was retesting the previous high, the Nasdaq actually didn't. So Nasdaq is definitely weaker. The Russell, definitely an impulsive move lower, and it seems to have been breaking below it. I would say that this more or less was a triangle. So I expect more weakness from the Russell as well. Dow Jones, as you see, currently testing support as well. I think that eventually it's going to break lower. Also, the DAX did make the move below this descending triangle, which we expected, and I think there are more downside objectives that the DAX can actually tag. The 61.8 of the last bullish leg higher that started back here at February 2016 comes at 10,570. So we're very close to that. I think we can definitely make that, and we can even make it lower than this. I mean, don't forget we've triggered a massive head and shoulders formation, which targets a lot lower. So we have a lot more to go to fulfill the target. Now, the FTSE obviously is being helped somewhat from the continuous weakening of the pound. But what remains to be the case is that we've broken below the previous low. So I expect this level 6,850 to act as a resistance if we get up back up there. And keep in mind that we recently tagged this low, which was in essence 1st December 2016. So we traded at 2-year lows, and this is something that you should not discount. Okay, so perhaps a rebound to retest this horizontal support resistance area, or even the broken or a pullback to retest the broken triangles support, and I think that has a big chance of producing more weakness from there. Same deal applies with the Nikkei. Nikkei got rejected from there once again, toying around with this trend line support parallel to this one. So it looks very likely that this is going to be a consolidation that's going to produce one more leg lower. So something like this, right? Like one, then an ABC and another one lower. So I would expect more weakness in the Nikkei. Now, on the other hand, what is amazing is the fact that we've seen everything that's strongly correlated with the USD yen, which is risk. I mean, the Nikkei, the US stocks, even yields have reversed, and the USD yen stubbornly keeps holding within, this. You can call it a triangle, you can call it an ascending wedge. We're going to see what is playing out here. It depends. If you want to see it in the short term, we take into account this intermittent descending trend line and this ascending trend line. You can call it as a triangle. We've made several attempts to break below it, but so far today, once again, although opening lower, now we're finding ourselves above the trend line once again. So we have to remain patient. Personally, I don't even have to remain patient because, as I've said, why would you invest capital in something that is so stubbornly refusing to move? I mean, there are several pairs out there that are moving, a lot. There are several pairs that the price action is much easier to read. Why would you want to get involved with the USD yen and just invest your capital here? Put some of your margin on something that doesn't seem to want to do anything. So personally, I keep monitoring it. I still believe that if it is to make some kind of a move, it's going to be to the downside. At least the next short-term move is going to be to the downside. But whatever. Just even look at the RSI. RSI is roughly stuck at 50, which shows you that the pair is completely trendless at the moment, right? So more or less the same deal is true here for the dollar. I mean, the dollar on one hand is showing clear signs of a loss of bullish momentum, but on the other hand, it stubbornly refuses to break below this horizontal support resistance area, which it has tested multiple times as support, and it's just not breaking below it. So I would really want to see the dollar make a move to the downside, but I'm not going to jump on anything both hands unless I see the dollar break below 96.20 at least on a daily close. Until that happens, there is even a chance that we're going to see one more leg higher before that. Of course, I do have dollar exposure, and the dollar exposure I have is being short USD Swiss because I had some very clear indications. And to be honest, dollar Swiss barely avoided testing my first target today. Unfortunately, I might take some of it off today. I might take some profits off today because theoretically speaking, this move lower from this pennant satisfies the minimum requirement of a corrective move lower. So that's why I had initially set a very, very conservative target, which was within this zone. As I said, barely made it, almost made it to my target today, and it's rebounding higher. So I have some exposure here. I have some exposure through crude. But other than that, I'm just sidelined and waiting to see some kind of a resolution. The good thing is that usually when you do see volatility shrinking, as we've seen in several of the dollar pairs in FX, usually that's something that doesn't last much. And usually when you see a contraction of volatility, or if since ATR is a better indication of volatility in spot FX, a contraction in the ATR, it increases the chances that once you get a breakout from the recent ranges, there's going to be some good follow through. So it's if you want to look at it from an optimistic standpoint, you need to remain a little bit patient. Try not to get chopped up in these recent ranges that we have, trying to make some sense from small moves that don't actually violate any real strong support resistance levels. The only pair that seems to be doing that now, as I said, is the cable today. So other than the cable, the rest just seem to be range bound of the majors. The only other thing that has actually made some move is the Aussie. So I do think that there is a chance that the Aussie has found a top here. But for me to get more confident about that, I would want to see I would want to see it break below 71.50. Then I'm going to get more confident about that this was a corrective move higher that's now over. Same deal with the Kiwi holding within this ascending channel, showing some divergence, but it still hasn't broken below this support area. If it does, so if I do see it break below 68.60, then I think that there is a chance that we're going to see another leg unfolding to the downside. So there are other pairs, though, that are of interest. For example, besides the cable, the Aussie Kiwi has definitely made a very big move, which is breaking below a multi-year symmetrical triangle. This is a huge technical development. You can see, I mean, this triangle dates back to 2013. So when you have a market that's been coiling since 2013, and you finally see a breakdown from here, this is something that you should expect to see follow through. I would be a little bit careful here, obviously, because RSI is very oversold. But any pullback to retest the broken triangles support as resistance, I think it's going to make it's going to provide an excellent entry point to see some continuation lower. Also, if we want to go to some of the yen pairs, I think that the CAD potentially is about to make a big move lower here, the CAD yen, I mean. I see a breakdown from this ascending channel, which was clearly a corrective move after breaking down below a much bigger formation. Because don't forget that we had a big move lower. This move higher was corrective. Then we had an impulsive move lower. I view this move as corrective as well. So I'm waiting for a break below this 83.50 level to confirm. But I think there's a high chance that we're just now retesting this broken channels support as resistance, and I do think it can produce some decent follow through. Also, as we've said, pairs like the Euro-Aussie, we warned about the potential rebound here in the Euro-Aussie. It was massive. I think that sooner or later these pairs are gonna also produce one more leg lower. Be careful here. I noted that on Friday as well. A confluence of multiple resistances is currently putting the brakes on this rebound in the Euro-Aussie, but we might see one more leg, higher before, continuation lower. Euro-Kiwi testing confluence of resistances as well. I do think that it might push once more higher before we see the downtrend resuming. Now, Pound Aussie and Pound Kiwi, no surprise here. They had much weaker rebounds, especially if you see the Pound Kiwi. Pound Kiwi didn't even manage to break through this descending channel. So bottom line, if you're looking to have long exposure in one of these crosses, I think that the Euro-Aussie is your best bet, a pullback in Euro-Aussie for one more leg higher. If on the other hand, you want to be short one of these pairs, the Pound Kiwi is by far the best one. Might create some kind of a triangle here or whatever, but I do think that it has a chance of breaking down without even producing something more than a rebound towards 190, right? Because the pound is much weaker than the euro, and on the other hand, Kiwi is now much stronger than the Aussie. If you see, even the RSI profile here shows bearish consolidation and nothing more than that for the time being. Okay, initial rebound from support, but failed at the first available resistance. Not a good sign if you want to be bullish this. Let me see if we have any questions. British Prime Minister May to head back to Brussels to discuss Brexit. Junior Minister, I don't think that Parliament has to agree on a no-deal Brexit, says Joseph. They have to agree not to have a no-deal Brexit at this point. The various factions are so chaotic that if they can't agree on anything, it seems like the most likely outcome is a no-deal Brexit. Yes, it is a possible outcome, I agree. And as I said, unfortunately, there's going to be a lot more twists and changes and a lot more news of optimism and pessimism before we finally can find out, what's going to happen here. By the way, Nidhi says Amanda is an expert. That's true. Amanda has been on top of this, since the beginning, and she's been doing a magnificent job trading the cable. Okay, let's have a look at some of the rest of the yen crosses. To begin with, Aussie yen. Aussie yen had a very, very nasty false break higher. You can see we had this descending channel. So that's quite a bearish development. I mean, the fact this first of all, this is the definition of an exhaustive gap, right? I mean, we gap higher, and that's it. That was a high. So this is an exhaustion gap higher. So first bearish sign, the fact that we immediately moved lower. Second bearish sign, the fact that we broke below the channel once again. So leaves this as a false break higher. So I would be careful here with the Aussie yen because the Aussie has already made a move that looks like the rebound might be over. If finally the USD yen decides to break lower, I think that the Aussie yen has more down to the downside, at least to retest this channel. So I think that Aussie yen is a pair to watch closely. I think it's quite dangerous being short there. On the other hand, I count here also, first of all, two things that make the Kiwi yen, I wouldn't say quite bearish yet, but I'd say a pair that you should be careful being long is the following. First of all, we had a quadruple bottom, right? 1, 2, 3, 4. So the quadruple bottom, because that was the range, this one and this one, okay? So the quadruple bottom target was here. So first of all, we tag this target, and the day after we actually tag and push through this target, we plunge below it once again. So we, in essence, satisfy the quadruple bottom target, and then we move lower. That's sign number one. Sign number two is that, you can count this as a 5-wave move up, right? 1, 2, very clear. 3, triangle as a 4th wave. 5. So at the very least, I wouldn't be surprised if there is, I mean, even if it wants to resume higher, I would expect that the first rebound from here is going to fail, and we should probably expect one more leg lower before higher, if there is any higher, because you don't know how this is going to unfold. But at the very least, as I said, I would expect the first attempt of a rebound to fail at some point, up to 78. I would expect one more leg lower to unfold. So Kiwi yen looks much, much better than Aussie yen. There's no question about it. So far, by the way, today's candle is quite a nice candle because, if it pushes a little bit higher, that's going to be an outside white candle. So a reversal day, in essence, right? It's already actually a reversal day if we close above the previous high. So, this shows that we might have a short-term follow through. But as I said, I think we should have more weakness following that before something else happening. Now, let's have a look at the euro yen and the pound yen. Euro yen coiling within the triangle. I really have no clue where the next move is going to be, and I wouldn't want to be trading this for the simple reason because as you see, there are several interpretations. This might be like a larger triangle. But one thing is for sure, volatility has been since August, in essence, has been contracting, and we find ourselves now within this triangle that has, actually we're reaching the apex of this triangle. Sooner or later, we should have a break out from it, either lower or higher. I think once that happens, we should have some follow through, but until that happens, you should be quite careful. And it's no surprise that Euro Yen has this kind of a behavior, simply because both the Euro and USD Yen, both the Euro USD and the USD Yen have been doing more or less nothing lately. So obviously the Euro Yen has been doing nothing. Now the Pound Yen, on the other hand, it's a lot more bearish. It did develop a triangle as well below this larger formation, which was corrective in nature. We did break lower, and now we seem to be breaking lower below this triangle. So I would be feeling much more comfortable having a position in the Pound Yen, and obviously a position being short. I think that there is a good chance that we're going to push below the previous low, even make it to the 61.8 of this rebound higher that we had from October 2016 to February of this year. Okay, so let's see what else we need to cover. We did speak. Okay, USD NOK and USD SEK. Let's have a look at them. My problem with the USD NOK, my problem turning bearish the USD NOK, is that USD NOK has broken above this very long-term descending channel, and for the time being, it seems to be finding support at the resistance. So I would definitely not be jumping the gun here at USD NOK, okay? Because there is still a chance that we're going to push higher from here. I'm not convinced that it's breaking down as long as this channel is holding. USD SEK, it's very hard to read price action here, because initially it looked like a nice corrective rebound, and I expected a continuation lower, but then this evolved in some other more horizontal type of a consolidation. So I would say that the more it fails to break lower, the higher the chances that it's going to eventually break higher. So I would be very, very careful here as well. I've reduced my position to like a minimum here, and now I have a position just barely out of the money, like 1/4 of a position, and probably I'm going to end up closing that as well, because price action is just stupidly stuck in doing more or less nothing. Now, if there is one pair that I think is showing some better potential in breaking down, is likely the USD MXN. It hasn't shown any follow through after this wedge, but on the other hand, I do see an evening star formation here. We did retest this high, so I think that USD MXN looks quite fatigued. I think that USD MXN has a much higher chance of actually producing something worthwhile to the downside. Coach?
Yes, buddy.
What's up? Who do we have today?
Adam Button.
Oh, we have Adam. Okay, good. And let me then.
Yeah, that 3 drive in the MEX on USD MEX on a shorter term basis was pretty classic, and it's not recovering like the rest. I agree with you. Do you think it could have anything to do with oil?
Listen, oil, first of all, I think that the oil's rebound is much weaker than I expected. So I've limited my expectations now to a potential like, ABC to that level up there.
Agree. Yeah. And then we flush one more time.
And then we flash one more time. Yeah, that's what I think as well. Perhaps towards the 61.8 at 45, before then seeing like a bigger rebound. So once again, it looks like I'm gonna leave this market with very minimum profit or empty-handed. But I'm gonna keep insisting in finding opportunities to go long, because so far it's not costing me, and I do believe that sooner rather than later we're going to have some big snapback in oil, and we're going to, you know how these markets are. They can produce some huge reversals, right? Now, having to do with
go ahead.
Having to do with the metals, I want to say the following.
I was just going to say that it's been the strongest. If you look all the way down your board, gold has had the most resilience, with the dollar not making new highs, not breaking down yet. Oil
very,
tanking.
very true.
Don't
that
you think
is very
so?
true. That is very true. Though I want to caution people here. Why? Because gold has already produced one more high, so it has satisfied my minimum requirements. I would ideally, since we broke above there, I would ideally want to see it make it to this confluence of resistance at 1260. Okay, that's what I would ideally want to see.
But back under 1238, the picture would change, don't you think? Like a false breakdown.
Okay. Absolutely. No, not a false breakdown, but like a completion of a corrective move. I mean, corrections don't have to be perfect in extending. So I would caution people for two reasons. One, it has satisfied the minimum requirements that I had after breaking above this point. So, I have the expectations that it might push higher, but it might not do so. And at the same time, silver seems to be getting rejected from this trend line once again. So if we see,
before we go to Adam, has the gold-silver ratio chart given any more clues since that big reversal, buddy?
We've respected
sideways.
We've respected it so far. I mean, we've respected the high and the range. So, but on the other hand, the ultimate confirmation here is going to come. I want to see this blue intermittent ascending trend line break.
Okay. Thank you.
If we do that, then I'm going to start feeling comfortable in building a position here. So this was because don't forget that candlesticks are 1 day reversal days. So they have their significance as long as you can combine them in outlook with other indications. So the good thing with candlesticks is that they're leading indicators. They give you a signal very, very soon, immediately. The bad thing with them is that
they help you define the risk.
Exactly, and they help you define the risk very correctly. But on the other hand, they are not enough of a signal on their own. You want more evidence to point in the same direction that a single day or a dual day reversal would point at. Okay, so I take into account this big key reversal that we had that day. As long as we don't take out its highs, I have it in the back of my mind. It's important, but for me, confirmation will be by breaking below this confluence of the support resistance area and the ascending wedge support. When that happens, then in combination with that big key reversal day we had, I'm going to be more confident saying, okay, it's a very good likelihood that we found at least a short-term top here. So there's going to be some follow-through in the gold-silver ratio. So I'm okay. So I'm leaving you enjoy the interview with Adam, and we'll be back here tomorrow as always.
All right, buddy. Nice review, Adam. Welcome back to Face. I'm giving you control of our television set now, man. And here you go. Looking forward to, it's been a while. Looking forward to speaking to you and seeing what you're thinking in here, Adam. Welcome back to Face, buddy.
Hey, Dale, can you hear me?
Yeah, loud and clear, Adam. How are you? Can you hear me?
On the camera too. I'm doing pretty well.
Good. Because I have lots of questions for you, because there are a lot of question marks on a lot of these markets, Adam. And I know it's not the beginning of December, but I'm curious how some things are playing out based upon, I know you do seasonal work, what you were expecting. We're at the 10th of December, what you were expecting for the month of December. And let me lead off with last time we had an interview together, you thought gold might be a great buy towards the end of the year. Did that move begin, or is there still another chance that we could have a big break into the end of the year?
Yeah, that's the one I'm really liking right now. Seasonally, it's very strong in January, February as you get in towards Chinese Lunar New Year. and over again. I mean, that's a consistent, strong seasonal pattern. And last year we saw it creep. It's been creeping a little bit towards the middle of December. I don't know if that's people front running it, or I don't know if that's something else going on, but you take that, you take the break we had on Friday up above the October highs in gold,
Right.
and it all is really coming together. And then you add in the volatility, you add in, you know, the potential for a dovish Fed and maybe some dollar weakness there, and you're looking at, you know, 7 or 8% rally in gold maybe through January or February from here, and we might already be into the first, you know, couple percentage points of that.
Yeah.
But you know, there's about 5 or 6 things really lined up for gold at the moment, and so
Okay.
I don't see anything not to like. It's seasonally, like, you know, December historically isn't that strong of a month, but I just think there might be some of that creeping seasonality because people are on it.
Okay, so how about seasonality for the Dixie and Euro that have been range bound? The Euro threatened to break out today out of a little triangle, and cable's dragging it back down. It's still higher. EG looks great. Which way do you think the dollar is going to resolve this sideways pattern that we've been in? Feels like forever, Adam.
Yeah, seasonally, December it's a very risk-on kind of month historically. I mean, we all know that. It's a very positive month for equities, not happening right now. It's a very positive month for the euro. It's one of the best months for the euro. That hasn't really been the case the last couple of years, but euro yen is one of the best trades generally in December, and you know, it hasn't come to pass here so far, and we all know the reasons why. And then even the Swiss franc is very strong this month as well. We might see some of that alternatively. So on a, you know, counter to that, you have some dollar weakness historically from the Dixie, but it obviously we all know the reasons why it's been so much trouble so far this month. But you know, there is a lot of bearish sentiment out there, a lot of negativity. So you know,
In what, the dollar?
In really everything, yeah. And it's funny how the dollar, so you kind of have it's a bit of the old dollar smile paradigm right now, where you have, you know, the dollar does well in this sort of extreme volatility scenario, this flight to safety. But then when that flattens out, you go back and you look at monetary policy. Well, if the Fed goes to the sidelines, then you have potential for some dollar weakness, especially against the low yielders like the yen, the Swiss franc, and the euro.
Yeah. Do you think they're going to blink this month because of what's happened in the S&Ps, Adam?
I mean, it would be humiliation for the Fed not to hike this month just on stocks. Right. I mean, the jobs report was still pretty good. All things considered, unemployment at generational lows. And they sort of signal they're going to, hike and then maybe signal a pause. I think you have some defiance within the Fed about that. John Williams, the New York Fed president, was very positive about the U.S. economy a couple weeks ago. So, and that kind of roiled markets again. So I think there is a bit of internal strife. But we heard from Powell, we heard from Brainerd on Friday. There was that Wall Street Journal leak, and it seems like the plan right now is to signal something, probably not entirely of a pause, but something pause-like, along with a hike in December.
So a hike in the language to mitigate any kind of pressure on financial assets.
Right.
Might be the way to go.
I'm curious to see how. I think every Fed chair gets this sort of challenge where they're pushed one way by markets and had promised to do something else. And you know, markets have a very long winning streak against the Fed when it comes to this kind of scenario. The Fed almost always backs down. I think every Fed chair says, you know, I'm gonna hike anyway. When they kind of come into the job, and then they start to see the market down, and you're getting like pressure from politicians, and you know, you're in the midst of this China trade thing, so maybe you want to see how that resolves itself. Then deadline for that is the start of March. So, you know, I think there's no harm really in waiting a couple months at the very least to hike, and then. But by and large, there's so much negativity out there, but I don't think the data really supports it. I think the market's probably gone too far, but I don't know. Maybe I'm too optimistic.
Let me ask you about U.S. dollar yen, because I was selling rallies last week. It worked, but not to the magnitude that I thought it would, with risk off and a huge bond rally. I've kind of moved to the sidelines, and U.S. dollar yen is looking like if a market doesn't perform like it should, Adam, with a tailwind, I always ask myself, what's going to happen if there's a headwind? So you have a view on this? Could the yen possibly be ready to challenge the old highs up around 114?
Well, you're right.
Yeah.
I mean, and it's one of those things that you look at, and the FX market has kind of consistently done this for the last 3 months. You get the equities kicking up all kinds of fuss, commodities teetering a little bit, and the FX market says, you know what? There's not a real big flight to quality, and so yeah, why not kind of push the top side though in dollar yen? If everything settles down, I mean, you're still, even on a Fed pause, it's still a pretty good carry trade going there. The U.S. economy still looks better than a lot of other economies. I don't know if you saw Japanese GDP overnight. It was pitiful. Missed the mark by a long shot. Terrible business investment, which is forward looking. I mean, this was the third revision on final Q3 GDP. And so there are some real Japanese concerns out there. I tend to think though, it's like a lot of these charts we're looking at right now. You've got this kind of narrowing, this indecision, and I want to kind of see which way it's going to go. And for me, that's why I go back to gold. You can kind of camp out there. I think now there's volatility probably isn't going to go down, and get a little bit there while the market sorts itself out.
Okay, so another market that made a spectacular move, and a lot of people are trying to bottom pick this. Any hope for a crude low, or at the best just a bounce, maybe back towards $54 or so, and it's still vulnerable?
Yeah, that's the weekly chart I put up there. I mean, That's bad. That's how many weeks in a row was it? It was about 10 or 12 weeks.
Yeah. It looked like a mini 2008 or something, or 2016.
What a disaster. I think, it comes back to the Iran deal, and people thought that crude was coming out of the market, and then there were waivers on all the sanctions. So I thought OPEC was a little bit constructive. We had Alberta take out 300,000 barrels of oil. I think U.S. drillers in the Baker Hughes data on Friday, we saw a little bit of a pullback there. Or we have Mexico talking about ramping up production today, but I mean, I think that's just all talk, because I don't know how much investment you're going to get there as well. But judging oil on the supply-demand dynamics or commentary that you hear is a bad idea in my situation. I mean, if you go back, in my experience, if you go back 2 or 3 months, everyone was talking about $80, $90, $100 oil, and nobody was right. Here we are at $50. And seasonally, it's still weak through year end and into January, and then there's a nice tailwind. So maybe in January you get the bottom. For sure, you can get a bounce. I mean, if we're talking short term to 50, even 60, I think you almost have to have a bounce to 60 to make it look like a reasonable market. Otherwise, you're going down. It looks straight down if you can't get a bounce from here. So you've got to be worried if you're any kind of crude oil bull. And I don't want to extrapolate it to a signal about global growth just yet. I think China, even if we get a bigger trade war, will be stimulative. I think I could see that situation where the U.S. even throws into a greater deficit, and some other countries as well. So I don't think the demand story, I really believe that demand is falling, and production, while it's higher in the U.S., it is falling in some places.
What about the soap opera in the UK, Adam? Any thoughts about it? Huh?
I'll pull it up.
Okay.
I mean, I try to stay humble, because I've mostly been wrong about it. I think, my base case is that there was to be some sense and sensibility, and someone would come to an understanding. I mean, I was over there 3 weeks ago for the Finance Magnets London Summit, and just that there's just so much anger, And you know, the politicians are really self-serving. I think everybody in the Conservative Party, like, it's not even a political party anymore. It's just a bunch of people trying to stab Theresa May in the back and become prime minister for what? I don't know, some dream that they can get a better deal. And I would have thought by this point they would have said, okay, we'll accept some of this, we'll move forward, and put the, you know, this isn't everything that we promised, but this politics, you always overpromise and try to deliver something, and we're just at this point now where nothing can get done. Today is obviously a huge setback. I mean, Theresa May realized she didn't have the votes. So I would thought maybe she could find some Labor votes and get it done, but I think they just see which way the wind is blowing and pile on. But you just can't navigate. You can't even envision a way out of this for anyone. I mean, if the EU digs in, they dig in. You can't have a no-deal Brexit, and I think some of that's priced in. So it's obviously depressed. Sterling is a buy at some point, but how much do you want to get beaten up while you wait? And technically, you know, we're at new lows here now, so this could easily turn into a disaster for Theresa May, a disaster for the Conservatives, a looming deadline, the EU. Not giving any more. It's a conundrum with the Irish border. So, and then the media is vile in the UK, making, you know, it's just angry and mean. And so until I think someone says, all right, enough of this, like, let's take the deal we have and move on, then, you know, you're in for, you know, 2,000 pips in cable, but it's untradeable right now.
Okay, there you go. So yeah, I mean, sometimes the right trade is no trade. I've been no trade in cable for a while. Was hoping, and look, I came in with morning commentary about waiting for the Brexit vote, and then, you know, the FACE attendees notified me, or I noticed after I was through talking about it, that it was, you know, it was put off again. So anything on your home currency on Canada that is grabbing your attention? Decent volatility continues in there. It's kind of like one of the majors that seems to react quite strongly in both directions, and wondering if you still think the trend is up in USD CAD.
Yeah, I like the Canadian dollar around here. I mean, that jobs report on Friday was possibly the best jobs report from Canada of all time. I mean, it was just a ridiculous number. For sure, everyone is expecting some of that to be given back. But I mean, if not for a change in participation rate, which is good, you would have had the unemployment rate fall by 4 ticks in a single month. And it was so widespread, and there was just a lot going on there. One of the part of the thinking is that there were a lot of cannabis created jobs because Canada legalized cannabis at the end of October. So you might have had a lot of hiring in November. And that could have skewed some of the data, but in theory, you would also think that would have brought people in who might not have been working as well, which is what we saw in some of the numbers. You know, the Bank of Canada, it's such a black eye, because literally the 2 days before the report, they're talking about going onto the sidelines after they've been hawkish for so long, and then you get dollar CAD jumping up and then right back down. You know, OPEC probably didn't do any favors in the near term with 51, but I think you're really going to be tied to oil for the next little bit. There's so much uncertainty about investment. I think in certain ranges, oil doesn't matter that much for CAD because the money's getting spent. You know, there's production growth, but when you hit below these certain thresholds, probably, you know, 55, 57, and then you have the spread with Canadian oil, that's when companies start pulling back, and we're at that situation now. Until oil gets above $60, I don't think you can really buy the Canadian dollar, but it's not that bad of a place to camp out. Seasonally, it's a good time of year for the commodity currencies. Canadian dollar, especially the Kiwi dollar, has a real December kick to it. I don't know what the flows are on that. The last dairy auction was good after, I think, about a dozen in a row, terrible ones. So
it's been displaying some very good relative strength while the dollar was, you know, making new highs. Aussie was too until the GDP number, and Aussie Kiwi seems to have broken down out of a long-term formation. So Do you think that Kiwi will continue to outperform Aussie during this time frame?
It has a lot of things going for it. I mean, if you're a little bit more optimistic about growth trade and the technicals do look good, there's a seasonal pattern behind it. You know, if you can manage the risk around it, even something like Aussie Kiwi or CAD Kiwi, if you really love your broker, because that's a wide spread.
Right.
But you know, there are some things to like about the New Zealand dollar. You don't have as much hard commodity exposure, and I think a lot of the negativity in the softs is you know, is not going to get a lot worse.
Okay, well, you know, you bring up the legalization of cannabis in Canada. Any chance that Trudeau and Trump will get together and share a doobie for the holidays and, you know, kind of make
all
peace?
Get together. We get Xi in there. We could get you know, just the whole works of them and get everybody on the same page. I mean, you know, you take a step back. It is just, there's just a lot of anger in the air, and I don't know what it is, because there are jobs out there. There are, you know, outside of. Yeah,
well, you know, what worries me is if there's anger now.
Yeah.
And the economy is still, you know, chugging along. I mean, we're not in recession. What are the emotions on the streets going to be like when a recession finally hits? And you know, that's pretty worrisome to me. So it makes me start to think as we head towards the end of the year. And I'm going to ask you for a Nostra button. What are you looking forward to in 2019 that may offer, you know, a great position type trade for 2019 that's going to either underperform, you know, a great short, a great long? Are you starting to look ahead, or just a day at a time? Anything you see going into next year that you want to at least be monitoring for potential buys and sells?
Yeah, I think it's one of those markets. Politics are dominating, but if you want to put me on the spot, I'm not afraid to call it. I think oil is the one that is. There's a lot of negativity right now. I think oil equities, if you want to get a bit more specific, are way beaten down. They'll probably get beat down a little more into year end, and that somewhere that I think looks pretty good. And that probably translates into some bit of Canadian dollar strength. It'll be a bit of a homer for next year. And I guess ultimately, if you take the whole of 2019, and I don't know what the timeline is on this, cable has got to get higher. I mean, it's so beaten down. There's going to be, somebody's got to come to their sense at some point. And I don't know if that means it gets down to parity or something first, because every time I think they can't get stupider and can't get worse, it'll get better. And then I think the euro as well. It's not so bad. If the Fed goes onto the hot sidelines, I think that's probably a bit of dollar weakness. I don't see a lot of dollar strength, is how I would put it.
Okay. Expectations for ECB this week, Adam? Are they going to stick to the plan of beginning to end QE? Yeah.
Well, the question is, you know, does the ECB have to change course? Like, I think the QE is, I mean, it's done. You got these signals about forward guidance about when they're going to hike in the summer of next year. Now, do they have to climb down from that now? Because that's always the playbook for the ECB. You know, or are they going to signal this? You know, it would be really helpful if they would signal things ahead of time, but they always want to wait until the last moment to do that. So I think they're going to come across as a bit, they'll be concerned about the economy, because in all the commentary they have been saying there are worries that the economy has underperformed, but at the same time they're going to say, listen, we think it's still going to be strong. I don't think they want to be in negative territory forever, so they're going to signal, you know, we think it'll be a little bit better, and I think the euro is probably going to get a bit of a tailwind from that. You can see how it's holding in there now. Alternatively, you would probably argue that all the best trades right now are technical.
Great point.
You just have to manage risk through this, because the headlines are out there. You know, it changes day to day, and if the euro breaks down, I mean, you sell it. That's it. I don't think the ECB even has to factor in.
And you think that Italy will, the worries about Italy, which have begun to fade, and the yields on their debt, that it won't be a problem, or is there a possibility that another country pops up as a problem for the ECB next year, like maybe something even bigger than Italy, like France? I mean, there's a kind of a lot of turmoil on the streets. I wouldn't want to be walking by the Eiffel Tower right now without a bodyguard. How about
Is that
you?
anger, right? Like we're in this bull market in anger. And you're right, we're probably even at a low ebb in that bull market in anger. So what do you buy when people are angry?
Guns.
Gold and guns.
All right, let's wrap it with Bitcoin. They say buy when blood is on the street. Well, this has been a total hemorrhage. So there's plenty of blood on the street. Do you think we're getting close to a level? I know there's not a lot of price history, and some guys are trying to use technical analysis, Elliott wave, different methodologies for trying to call some type of low in Bitcoin. I've heard, 2,800, 2,500, 1,000, and it's hard to value. And again, I think you just have to rely on the charts. What do you think?
There's something around 2,900 there on my chart that looks a little bit better. It looks like there's some support there. That said, you have to have some kind of bait. I mean, a company will only fall as far as as its dividends or its assets. And
right.
Something like Bitcoin, you have to have someone believing in it. And even when you read amongst the bulls, like there's so much fragmentation now within the crypto space. You have a lot of the true believers have really switched into other instruments that are more dynamic, that better governance, better utility, and they're working on those projects, blockchain projects. So there was such a the disgusting part of humanity is you have these great technological innovations, then it gets flooded by salesmen and scam artists, and it's just turned regular people off of anything to do in crypto. So until you prove some utility, you have to sell the rallies, and whether you can get a bounce up to 5,000, even 6,000 to sell, even sell from here, I don't see any reason.
It's going to take some sponsorship. SEC keeps turning down ETFs, so until they give people a product, and there is one. It's a Bitcoin Trust, GBTC, I believe. It's like the only one.
Yeah, I just don't see regulators. I don't see it. I mean, I'd be shocked, and they would be bullish if we could get an ETF, a real ETF.
Yeah.
But even in the futures, the volume's not great anymore. There's a lot of work going into the stable coins, but I just
it's a no touch.
Always darkest before dawn, and
I think there's probably from the level you mentioned some type of reflex rally, because I've noticed that sometimes bubbles, when they pop, just the sound of the pop, the bigger the bubble, the louder the pop, that at times there could be something called an echo bubble, where it echoes what happened maybe to a smaller degree. So we'll see what happens around 2,800. But I'd like to wish you and your family and all your associates at Forex Live a very Merry Christmas, Adam, and a Happy New Year and much success.
Greg said the same. Greg was just telling me to say hello to Greg. Wish him a Merry Christmas.
Okay, thank you very much. All right, well, thanks so much. And like the snowflakes in Canada, I hope pips rain down on you and everyone that hears your words, buddy.
You selling everything Canadian. If you look out my window right now, there's a lot of
that white stuff out there. So are your children old enough to go out and build a snowman with you?
Hell yeah.
One of them? Okay.
We're 1 and 2 years old, so I'm doing the labor, but they enjoy it.
Okay. Are you sleeping yet?
Buddy, I had a good sleep last night, so I was 1 day at a time.
Thank you so much, Adam Button. You could follow Adam at Forex Live or on Twitter at FX_Button. Adam has a great rep for being one of the best news traders out there. Greg is a great technician. Very good team at Forex Live. Thanks for taking time out of your day, my trading warrior brother.
All the best, Greg. In 2019, we're going to have a lot on what's coming up next year in the next few weeks at Forex Live. So, but right now it's a day at a time, and we'll see where the next headline's coming from. If you want to know why markets are moving, forexlive.com. So we're usually 24 hours a day, ready to roll.
All right, buddy. Thank you, Adam. Great talking to you, my friend.
All
and
right.
Really happy holidays to you and everyone.
You too. You too.
Thank you, Adam. Adam Button, everybody. That's a wrap for Monday. We'll see what happens on Turnaround Tuesday. I'll try and listen to the news before I start talking about a Brexit vote again, since I can't count on anything happening the next day. You're welcome, Marius and Hammett and everybody. Have a great day. See you in private chat with Blake and the boys, and enjoy the rest of your day. Good hunting. And remember, most of all, don't just count your pips, count your blessings. We'll see everyone tomorrow. Thanks, Ed.